Welcome back. You're still tuned into Trading Hour. Let's now get you a conversation on the market. Siddarth Bhamre joins us. He's head of research at Religare Broking to take some questions on these individual pockets. Siddarth, thanks a lot for being with us today. I want to start by asking you about a sector which has been hot this week, which is the cement pack. On news that there have been price hikes, to the tune of 10 to 35 per kg. But, per bag, sorry, not per kg there. But, take us through what you expect here. There's also, we've been talking about this monsoon, which has been deficient, which has led to an earlier resumption of construction activity as well. So take us through your call on the cement piece from here on, and any, top picks that you have within this space as well.
Good morning, Pavitra. Thanks for having me on your show. We are optimistic on cement space at large, and our, main feature for why we were positive on cement, or why we are still positive in cement, is capacity expansion. Yes, the factors which you mentioned are showing a lot of short-term interest in this space. But then the bigger picture is that how these players are confident of expanding their capacity, and some of them have laid down plans till 2030, and that would, lead to substantial rise in revenue going forward. From a shorter-term perspective, what we are seeing is that these stocks have shown substantial run-up. They have, most of them have met our target prices. We are not suggesting to sell them right now. We are suggesting our clients to hold, because from valuation perspective, they are not available cheap right now. But we are very optimistic on the revenue growth. And even if these stocks remain at these levels for a couple of quarters, the way earnings are growing, the valuation metrics would again compel us to change our ratings from hold to buy. So we remain optimistic. We like stocks like Ultratech Cement, Dalmia Bharat, and Ramco Cement from mid-cap space.
Okay, so optimistic on cement. Siddarth, hi. Have to get your take on another sector where I think you have a constructive view, at least in the large caps. And now I'm talking about IT. Interestingly, there's a price action in the stocks that's showing up. They've recovered very handsomely from the lows after the first quarter result season. And companies, at least some of them, are sounding not too bad. We just spoke with Happiest Minds, and they're saying that, there's a pickup and conversation with clients going well. Mastek said that the pace of deal closures is improving. What's your sense, and what would you prefer buying in IT?
Hi, Surbhi. So last time we spoke, Surbhi, that was in first week of August. We were mentioning that our market view is we are not very positive from current levels. We feel that valuations are stretched. And then we dwelled into stock specific, and one sector which we mentioned that time as well was IT, and IT has outperformed in last 1 month. And we believe that outperformance might continue for some more time. Why we feel so? Because, today, if you look at the earning dependency, so much skewed towards what's happening in US. And since last 1.5 years, everybody's talking that US is going to slow down and IT is going to correct. And that's the reason IT corrected. But last 6-7 months, we have seen strong outperformance by IT. Reason being, the job data number coming from US is still strong. Yes, the latest figures suggest that, instead of 3.5, the numbers came at 3.8. But till the time these numbers don't go above 4.1, which is the limit which US has set, the Fed has set, I think these concerns about US economy slowing down and hence IT would correct, I think market has factored in that. Last quarterly, barring Infosys, I think numbers were not that bad. Commentary was not that bad. In fact, SCL Tech management didn't revise their guidance downward. TCS has been saying that the order wins are great. And you guys have been flashing today about, some more orders backed by that company. Even Infosys is bagging good amount of orders. So I believe, valuation-wise also, this space is looking very attractive. And I keep saying this will be again and again, that you can't get clarity and valuation, or visibility and valuation together. So today, valuation is supporting, and I guess exposures can be increased from current level as well in SCL Tech, Infosys, and TCS.
Okay. Another space which is fairly bullish on is insurance, particularly on the life side. You've got a buy call on SBI Life, HDFC Life. Take us through the big picture here, the thesis behind the bullish call.
Hi, Rima. So, last year we have seen that because of regulatory changes, we saw this sector underperforming, whereas market was range bound. Most of the insurance space corrected. And since, last 4-5 months, or one can safely say since beginning of this year, this sector has started performing well, both in terms of stock price as well as what's happening overall in the economy. So it's a high growth space, Rima, around 18% sector growth we are seeing. And HDFC Life and SBI Life, which are our preferred picks, are growing at much faster pace than sector. In fact, some of the months we have seen growth rate as high as 30% in the new business premium. Valuation point of view, also these stocks are trading at less than their 5-year averages, which makes us pretty comfortable to invest at current levels. Now, generally, investors do see that prices have gone up substantially, but from valuation perspective, I believe they are still trading at much lower levels. We are seeing the space, the general story, Rima, that penetration is still low and insurance is going to grow further. You won't find large cap names like this where growth rate is about 20%. Generally, we only talk about banks. So this is one space, and needless to mention that the kind of exposure, the channel, and the network which these two companies would enjoy because of their parent banks would contribute substantially. So yes, this space is here to stay, and I believe even at current levels, the exposure can be taken. We are having target prices which are to the tune of 18 to 20% from current levels.
Okay, got that. So that was very useful chat with you today on all of these individual pockets. Thanks a lot for joining us. We hope to have you back on soon. With that, it is time for a short break on the show, but there's lots more market action that we're tracking on the other side. So stay with us and we'll be right back.